Wall Street is saving Bitcoin. Fed Chair Powell speaks today to try to bring the markets back down to earth, while Biden at the same time says, not so fast, no recession. We are going to grow the economy, unleashing Bidenomics into the economy. So let's jump in, take a look at what's going on. Markets have been kind of up and down all over the map today. Dow, S&P down just a little bit. NASDAQ was down about 0.5% earlier. It has recently come back. When Fed Chair Powell was speaking earlier, the markets dipped a little bit because he said, we believe there's more restriction coming. He said that I wouldn't take moving at consecutive meetings off the table. So one of the funniest things he said was when he was asked, well, you say you didn't pause, you say you didn't pause, you didn't stop. So what was it? It wasn't a pause, it wasn't a stop, it wasn't a pivot. So what was it? He said, what we did was we maintained the current level of interest rate policy. So that was a pretty interesting comment coming out of the Fed Chair Powell today, and basically saying inflation is still too high. The labor market is still way too strong. The service sector is too strong. Consumers are still spending because wages are up. They have a lot more work to do. They tried to pin him down on, will you hike next meeting, hike, skip? And he said, we're not going to make that decision now, that we're going to be obviously data dependent, wait and see where things are. But it looks like what's on the table at the next meeting is most likely a hike, especially given where markets have been lately, where inflation is, where the job market is, things like that. The economy is still running pretty hot. The consumer is still pretty strong. People are still spending. This is a consumption-based economy. And, with people, with the employment situation as strong as it is, that means people have money. They're still out spending. People have a lot of equity in their homes. They have a lot of credit. So the recession that everybody's been calling for is kind of off the table right now. What the Fed is looking for is a soft landing, meaning a couple more rate hikes, potentially for the market to continue its bottoming process that it's been in since the peak of 2021, as the things continue to unwind. And again, this is a consumption-based economy, so the only way to slow it down is you got to break the consumer. And people have not stopped spending right now. And with what Biden is unveiling right now in his speech about Bidenomics, the infrastructure bill, all the spending that's going on to create jobs and stimulate growth is kind of at odds with what the Fed's trying to do in terms of cooling the economy. So the federal government and the Fed are kind of fighting each other. One's trying to slow the economy, one's trying to stimulate the economy. So it's going to take a lot longer than what a lot of people think. And the Fed said they didn't see inflation coming down to their 2% target until well into the end of 2025 or even into 2026. So what he told the markets was expect higher for longer. The interesting thing is the markets, the consumer, the economy has digested higher rates. Mortgage rates are back up to 6, almost 7%. The housing market is still plugging along because you can get rate buy downs to keep interest rates low, even though that's not a good thing to do. It's not a wise thing to do financially, but it does help people get into a house that otherwise couldn't afford it. I bought my first house in 1990 on a 3-2-1 buy down. So that's where the interest rate steps up every year. So with rates being at 6.5% right now, you can get into a house at 3.5% the first year, 4.5% the next year, 5.5% the third year, and then it steps up to 6.5% in year 4. Chances are, hopefully, what people are banking on is they can refinance somewhere along the way, so that so they can lock in a lower rate longer term. But that's kind of what's keeping the housing market going, as well as cash purchases and just limited inventory, because so many people are locked into low mortgages that they cannot sell their house and buy another one because where interest rates are and where their current mortgage rate is. So a lot going on there. The Justice Department charges 78 people with $2.5 billion in healthcare fraud. So we've got healthcare fraud. We've got the COVID stimulus spending fraud going on, 100, 200 billion, whatever that was, and money that was stolen that was, for part of the PPP and stuff like that in terms of fraud. So Justice Department has their hands full. Are they going after Binance? We'll have to wait and see how that shakes out and what's going on there. Wall Street is coming to the rescue of Bitcoin. Let's take a look at Bitcoin. And what do I mean by that? All of the ETF filings. So now we have, as everybody knows, BlackRock has filed for the ETF. ARK now, Kathy Wood of ARK has amended their ETF application to include that supervisory clause that BlackRock has that leads a lot of people to believe that they're going to get approved. I saw an article on that from Kathy Wood somewhere in here. Let's take a look and see if I can find that. Well, I can't find him. Anyway, she amended the application to have that surveillance agreement. And that was one of the things that many people speculate is going to launch BlackRock to the head of the list. And she said with a nod and a wink, we were first in line, by the way. So she's amended the application. So would ARK be the first one granted a spot Bitcoin ETF? That's what this price action's been all about. The exchanges and the market makers are manipulating the price to get people to buy in. Michael Saylor has recently bought in here. We know what happens every time Michael Saylor buys. Generally, the price drops on most of his purchases, but he hasn't bought in a while. He's back around break even right now in terms of his average cost. So interesting to see. So we have BlackRock, we have ARK, we have Grayscale, we have Fidelity came out the other day, said they're filing for a spot ETF, which is interesting because with Fidelity, you can buy spot Bitcoin and they will custody it for you. So you can own the asset. So why buy an ETF when you can own the asset? But anyways, one of the reasons for the ETF, and the reason I say Wall Street's going to save Bitcoin, is because, and if these ETFs get approved, Bitcoin will likely take off. How far will it go? We don't know, but that will likely bring a lot more capital into the market, which puts pressure on price, creates demand, would drive the prices higher. But there's a lot of people that need to get out of Bitcoin that have, lost a lot of money along the way that don't see these huge astronomical numbers, and then really the question is going to be how much capital is going to come into the markets, what happens with Binance, what happens with Tether, things like that. But at the end of the day, with the ETFs coming into the market, that could create an interesting scenario for Bitcoin, creating a lot of demand. And you get all the registered investment advisors, you get all the fund managers, wealth managers, everybody recommending Bitcoin ETFs because they will make more money doing that because they are incentivized and they get paid commissions for putting people into those investments. So that will drive a lot of traffic into the Bitcoin ETF. So a lot of stuff going on. The market's still kind of plugging around, wrestling with the 618 right now on the Dow, wrestling with the 702 on the NASDAQ, and in between the 702 and 618 on the S&P. And again, these are the areas where markets will roll over like we've shown in previous cycles. When the markets are in a big bear market down cycle, those retracement levels are critical levels for the market on the way down. So generally, if they can hold that as support and turn around, then you could look for a continuation of the bull market. If they cannot reclaim these levels and it continues to roll over, 0.5 is your next retracement level that you could see the market try to find some support on. And if it loses that, then it could continue down and put in some new lows. And what would drive that? Well, obviously a recession, liquidity conditions, credit markets, some sort of an event, and the Fed obviously raising rates is going to put a little pressure on the market. If they do what they say they're going to do, the markets do not think they're going to raise rates. And of course, geopolitical events, if things escalate in Russia and Ukraine, if NATO gets involved, if China escalates, those things would obviously weigh on the market short term, kind of like the invasion of Ukraine did, until things resolved and the markets can bounce back. And, that's what drove the markets down a lot previously to those lows was fears over the war and things like that. So right now, there's still a ton of liquidity in the markets. Even though money supply is contracting a little bit, there's still trillions of liquidity in the markets that has not been pulled out, with the Fed unloading the balance sheet, with the Treasury replenishing their account, coming out of the repo market mostly, which is the bank deposits, that they place with the Fed. That's kind of what's replacing the Treasury account right now because of the yield that they're getting on that. So that's keeping that's going to take a little liquidity away, but nothing major. Dollar having a little bit of a bounce here. Question is this going to work into a W type of a pattern, or are we working in an M type of pattern and continue to go down? We don't know. We'll just have to wait and see. The 2-year, 10-year hanging out, but still a big inversion of that yield curve right now, with the 2-year at 4.7, the 10-year at 3.7. That's a big spread that generally, the bond markets are still predicting recession, but right now, a lot of people are coming around to the idea of a soft landing or no landing, and the Fed with their predictive powers is saying that they're predicting a soft landing. And of course, they also predicted that inflation was transitory. Inflation was transitory. So we'll see how that works out for them. And let's see, Ethereum. Let's take a look at Ethereum real quick. So everything's just kind of hanging out, waiting for the ETF, right? So once the ETF gets approved, if that happens, the ETF train begins, and we get a lot of approvals, then that's going to juice Bitcoin. You'll probably see Ethereum and altcoins kind of follow. And then, if something happens with Binance, some sort of a judicial process, criminal prosecution, Tether, if those things, end up unwinding in the United States, then that'll put a little bit of pressure on the price action as well. But as for now, Wall Street to the rescue, and we will see who wins between Bidenomics and the Federal Reserve in terms of growing the economy, tightening the economy, getting inflation down. So these are the things I'm looking at. I'll see you in the next video.